All right, good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for Sunday night, October 18th, 2020. So that means it's time to review some trade frames you guys posted, courtesy of Pavel. All of them are good. There's 4 really good ones tonight. We're going to start with, what is this, Caterpillar? So we're Caterpillar on a daily. This thing has just been amazing. We had a low, higher low, a third higher low. So this whole chunk here is a Kata 2 with a buy indication right about there. And when you add this higher low, there's another buy indication here. And both of those gave opportunities for nice trades. This would have been like a sniper exit here. This would have been a managerial exit in the Wu Wei approach. You know, there's another even more relaxed one. We haven't named it yet, but it's the Z-1. If you just say, look, as long as the river acts as a boundary, then I'm pretty good to go. So you can still get these kinds of entries. And the Z-1, very long term. And that's probably suited for weekly trades too. So when you're looking at the core portfolios after we get through the selection shenanigans, we're going to keep in mind the Z-1 and the weekly, because that's going to be pretty good. But meanwhile, you got this really nice move here, and now notice how the RL10 is pulling away from the RL30. This is where the RL30 leaves the river, and so this is really the beginning of trending behavior. So that's where the trend officially begins, right here. Back here, this is where that happened also, and that was followed up by 15 days of pretty good gains. You know, from this was about 140 to 160, and that's plus 15% in 15 days. So 1% a day consistently. That's just to measure how strong that is. You can't really tell the relative strength from this chart because you don't have the rest of the market in the way. So what Pavel's laid out for us here was there was a slight pullback, a gap down, and then we got 1, 2 really strong days, and it's pushing Z3, and you can see that we've got this expansion of the Bollinger Band means. So that's evidence of gathering strength and accelerating. We have the PSAR here, skin, spine, and top skin of the dragon. Got a 1-day low right in there. So any one of those could be used as an initial risk if we get a breakout from the yellow zone. And then he's marked off a new high, the Z3 excursion. This is a half of an, if that is an ATR, then this would be 1/2 of an ATR and a directional move. That's pretty good. And this would be another position on the full ATR move in that direction. So certainly 176 is in range just on a 1-day move. Now, as far as the downside goes, I don't really I mean, I don't disagree with where he's drawn the lines, but um, I would be reluctant to short Caterpillar, and only because it's the strongest symbol and probably the strongest, safest index, for the next 10 days. So if there were market conditions that led me to want to be short, I think I would rather find better short targets than the strongest stock and the strongest index. But these are certainly these are road signs on the way to the downside, right? And the way I would look at that is you decide how much risk you might want to take, and then you could use that in order to come up with your dollars per share at risk. And if we just took the swing standard of 2 ATRs, that would be 1, 2. It's probably the Bollinger Band mean, 152. So if you got long at 171 and your stop was going to be below 152, call it a $20 stop. That's about an 11% protective stop. That's reasonable. What I think a reasonable move would be is start with an intraday position, and if that works, then the money that you make on the intraday trade, I think you could just leave the swing stop down here and make it 1 ATR plus whatever gains it makes. And that way you could get probably, a $10 initial risk. So you could get twice the position size. But yeah, I like Caterpillar here. This is a good trade frame. That's what strength looks like. It's a rock solid company. Good layout. Next one up is Apple. Not quite so strong, but still pretty good. So we're going to notice a swing low and a higher low, which would make a reasonable, the reasonable entry in this was like right about here. That's that 2, that second PSAR dot entry right here. And here's the PSAR flip. So you'd have a stop. Your stop would be here at about 108. And that's not a bad place to have a stop if you're already in that position. We've had 2 little legs up, I would call that. Come on. All right, 1 leg, 2 legs, so the bottom skin of the dragon is what kind of keeps that in line. So you would think a 3rd leg could do that, and maybe even 127 could be in play. So if you buy this yellow zone breakout at 121.5, and you're aiming for 127, that's $5.50 of gain. So that means you could have something like about a $2 stop and have a comfortable 2-to-1. And, if 121.50, 118, that's about a $3 stop. And that still gives you just about a 3-to-1, 2-to-1, excuse me. So a range risk is reasonable. So he's got the low of the day marked off, bottom skin of the dragon, PSAR and Bollinger Band, the RL270, I'd say probably the Z1. So there's a number of triggers on the downside. Now, given this little sell-off here most recently, and if this doesn't work to the upside, you could see how the RL10 is rolling over and it's here. So this is actually a downward cycle. So as compared to Caterpillar, this one is a little more arguable as a reasonable short, because even though it's Apple and everybody wants to buy it, this has been 30 days, and this move up was not as compelling as the move down was. The move down feels stronger and more decisive than this cautious move up. So I mean, I think there's still a sense that Apple has moved out faster than the other techs, than many of the other techs, so that it may be a little vulnerable. But I think this is still this is a good critical state in either direction. You've got a measured pullback, and I think that if it can get through 125, the Z2 and the previous hump of the dragon, or the RL10, the RL270, then I think, and then it gets above 127, then this thing can really go. It's in a consolidation period. You can see now with the Bollinger Bands compressing a little bit here. And if it breaks out above, say, 125, then you could see certainly this kind of a move again when it broke out from that Z3 pinch. So Apple, I think, is in good shape. It's a must-own for hedge funds and mutual funds and pension funds everywhere. And with the split they just had, they're now able to buy it in their portfolios. So I think it's a good long-term play. We'll take a look at Brazil. Getting into our kata number one boys here. So this is an interesting one to me. It's got this, we've had it. You can see that it goes through these periods of oscillation, expansion, and then contraction, expansion, contraction. And it's now starting to contract again. So that would argue that rather than great big breakouts, that an orderly pullback here to 2750 is more likely, because you have a RL10 high, almost the same high, but now you got a low, a lower low, another lower low that is rolling over. And so to me, this move down here is the least surprising. So I like where these are at. This is a 2-day low, bottom of the dragon, Z1, PSAR flip, RL10 belly, Z2. All of these are in play. And so the next stop should be around 26 if this thing just maintains its downward drift. So I like that. Again, I would always start these with a hybrid frog intraday, and then keep 1/5 of it as a swing trade in that direction. Especially if it was down, you could even convince me to hold 2/5 to get a double position on a swing. The upside is certainly there, because all it has to do is, because now you can see a low, a high. Now, if this can hold here and break out, then after about 3 days of gains, this thing, the RL10, would roll over, and then we'd have a kata number 2. And then the upside of this thing is 32. So this is a perfectly postured critical state ready to go in either direction. Start it with a hybrid frog first, intraday, and then just hold a piece like we always do. And you get rewarded when you do that in EWZ because it has these nice orderly, almost like ocean swells. Okay, last one for the day, DIA. Okay, so we've had a period of pinch. And then some range expansion. This downward move, but held support at the previous Z3. PSAR flipped. This is where that PSAR -2 entry would have gotten you in here with a stop here, which again, because the RL10 maps directly to where the PSAR is going to flip because of math. And now you've got a nice entry right here. And in this one, if we're looking at the Wu Wei exit, we got 1, 2, 3. So Monday, that one should come out of the initial risk and become a no lose plus dinner for 2. And it's postured. It had a nice tight doji along with it. The 3 closes almost all strictly on this line. Tells you that this is ready to go in either direction, but nobody wanted to hold that over the weekend. Everybody holding their breath for news. This one is actually the strongest of the U.S. indexes right now, so I can certainly feel this thing moving up. The Dow was the strongest U.S. index on Friday, and no reason to think that it wouldn't continue to do that tomorrow. So I like it. I see the daily high, the Z2 breakout, the previous Z3, and then the current Z3 excursion. And I'd be looking to add positions at each one of those. On the downside, we've got the low of the day Friday, the bottom of the dragon, the Bollinger Band mean. Not sure what that one is. Maybe a previous Z2 excursion, and then the belly of the dragon. So these all look like reasonable downside triggers and tripwires, and I would trade this one in either direction because this is going to be the bellwether for the political season. How bad the politics gets is going to be reflected in this index. Okay, so I like all that. We have that's all the ones that were uploaded. With your permission, I'll do a see, maybe do a speed run here. Double bottom in play here at about 11.5, holding support there at the belly of the dragon. and then 2 days of recovery in a row. I think that's a buy if it breaks out above, above there with a stop below the belly of the dragon, or even the PSAR. I like that one as a breakout to the upside, and that it gets rid of that sell-off Thursday. Like if you eliminate those two, then that's a reasonable supported spring crossing. It had already gotten across the Bollinger Band mean. So here's one where I think you can get back on this thing and take advantage of the strength in XLB. Apple. Well, we've already looked at that one. So Amazon. All the techs have kind of topped out here, and it sold off pretty sharply Friday. So that was not a persuasive day Friday. So I'm very cautious on Amazon right now. All the tech leaders feel like they're a little bit vulnerable. Boeing, sideways quiet channel. That's like an intraday trader only. Caterpillar, just amazing and awesome. See our previous markup. Cliff Natural Resources, even better than U.S. Steel. And you can see that we've already got an entry in here because we framed this out as a critical state back on Wednesday. So I like this one long and strong. It's cleared that previous Z3, and it's better than U.S. Steel. Salesforce, it got added to the Dow back in this pile of crap here. Sold off briefly and is working its way up that initial stack that we saw in this critical state. I like the higher low here. So if that takes off, up it goes. I like Salesforce right there. Cisco just can't get out of their own way. This almost feels like a washout and a sideways quiet, or I'm sorry, a supported spring crossing. So here it went to winter to spring, and it just started summer. So I actually think there's some room for this to go with a pretty tight stop down here at 38. That's a 5% risk. And, it's got to get to 42 and beyond. So an initial target up here at 42, it's only $2. But if you got a 50-cent risk, maybe start it with an intraday. Diamonds, we've already covered. DuPont. It's trying hard to get through this resistance up in here. If it can get above that, it goes from 52 to 56 pretty quick because there's no resistance overhead. And then it's back to square one. So I like that as a sideways quiet channel breakout in here. And if the materials continue to and industrials continue to outperform, that one could go. That's a sleeper. Devon Energy has been crushed just like the rest of the energy sector. But again, I like it holding support here at about $9. I'd use the Z3, I'd use a $1 risk, and I'd be shooting for a return to 12.5. So I like it on the upside, but this is one of those that I would start as an intraday move, and then build towards a swing position. And even the swings in this only last 3 or 4 days because of the vulnerability of the energy sector. EEM, emerging markets, is back to its long-term, price levels back here, and breaking out nicely. I think that's the way you go. That's the rest of the world kind of adapting faster than the U.S. Japan, a defensive play, really tight, narrow ranges in here. Not a lot of growth potential in it, but it has held off the sell-offs better than most. Really, just for the defensive-minded. I really like Mexico here. We talked about that one on Saturday. It's cleared this hump. It's clearing the Z3s, and I just think this thing is postured to go to 40. Halfway back up the stack to here. That's where the gap was right here. So 40 is in play to the upside. But just like EWZ, I start this one as an intraday hybrid frog and then keep a fifth or 2/5. And you can see that Brazil, we've already seen, is not as strong as Mexico. Google and the techs, I just feel like they're vulnerable. They were very vulnerable in this sell-off from peak. They've only gotten halfway back up the stack and are stalling. I think they're just waiting to see what the election's going to say. But even at that price level, they are above the previous high after the sell-off. So they've had a really nice run. I think you can get that if you just played TQQQ. You'd be in pretty good shape too. Goldman Sachs next. Oscillating, not much to commend it. It's at the end of a intra-channel swing right there and starting to roll over, and finance has been weak. I'd stay away from it. Home Depot, one of the strong ones. This is like Cat and Procter. This thing's ready to just break above that, and up it goes. I'd buy it on any strength and just hold it. Trail it with 2 ATR and just let it go. Intel, much like Cisco, although it has turned the corner faster than Cisco and is actually digging itself out of this hole down here. Finally, is at fair value. It's going to close this whole gap now. 59 or 60 is next. That's a 10% move. I like Intel. I think they've turned it around. The Russell in pretty good shape. Not quite back to where it started prior to the sell-off, but it's got a supported summer crossing, and any breakout to the upside I would reward. I would start it intraday only and only keep the positions paid for with markets money, the usual. Microsoft, much like Google, it suffered in the sell-off. It hasn't broken out to new high yet, but it's consolidating and holding there. So I think it's an intraday trader primarily. Nikola Motors is just kryptonite to your bottom line. It's an intraday trade only. Speculative thing. Nucor, much like Alcoa and U.S. Steel and Cliff, it is like an XLB. It has climbed out of the hole and poised to do great things. I think it's a swing long here. NVIDIA, stronger than Intel, making an all-time new high. I reward any strength. Clean energy, long and strong, get on it, stay on it, never leave it. Procter, brilliant, get on it, never leave it. Bill Ackman's fund, I just really like this guy. Speaks truth to power, clever investor. The sell-off didn't hurt him as much as the market did, and yet the rebound was better than the market. So he's got something going on that's good right there. PSHZF. Silver is just suffering. It has been unable to recapture the highs as a defensive play as an industrial metal. It's better than gold, but it's disappointing. Stay away from it. Virgin Galactic intraday trader only. Although here, I think with the uptick in the RL10, I think that you could, let me highlight that. I think with this little pullback and then a recovery, if it gives any sign of strength here above 22.5, it's going to go up and test 25, and that's 10%. So, yeah, it started as an intraday. Simon Property Group pays a dividend. Sideways quiet channel to the max. PSAR just flipped, but this one is like I think it's just an intraday only. But what I like about it here is that it has found support down here at Z1 before and went from Z1 to plus Z2. So with a really tight stop, you could see 73 on this one and make $8. So if you can manage a $2 stop intraday. Treasuries. I'm still long on the swing coming out of the consolidation area here. I still think there's a role to play as a defensive play. The last 2 days have been a disappointment, but I'm going to stick to my guns on that one. Tesla, brilliant. Held off. It did not sell off at all, noticeably, on Friday. So I like the fact that it held above the Bollinger Band mean, which is sloping up, and the dragon's up, and it's summertime, and it's breaking above this peak. It wouldn't take much to juice it up to 500, and from there it's straight to the moon. Long-term keeper. Twitter, grinding north. I like the recovery move on Friday, and if that can resume, it'll go to 52. So I like it all the way back here from 28 when we first got it, and then again at 40 and a half. So long-term believer in it. It's the one tool of democracy we can count on. Oil has kind of leveled off here at 29. Russia and Saudi are talking about price supports, so we could see a bump in that one. Walmart, long and strong, gotta own it, and gotta love it. The only hope in the battle against Amazon. It is well above its sell-off here from March. Look at that. Who'd have thunk it? Quietly getting it done. Wheat and precious metals kind of stabilized here. It's in the sideways quiet channel. Could there still be a run as a defensive play? I guess so. It looks better than silver. But it's been kind of dead money for 30 days. Win, intraday trader only. U.S. Steel, strong upward move has broken out of the sideways quiet channel, and I would reward it on any breakout to the upside. Materials, strongest sector in the S&P right now. Energy, the weakest sector, as you can see. Finance is just mucking around sideways, nothing to show. Tech has been very strong, has pulled back and recovered its previous strength. So I think it's postured to go. Let's keep an eye on that one. If you like XLK, then you will love TECL, which gives you 3 times the return of this one. So if you like this, go trade it with TECL. Healthcare, well suited. I just don't know how I guess they are counting on a Biden win. They should work in a Biden win because he's not going to fundamentally change anything, that jerk. Discretionary, tied to Amazon, and well postured. That's pretty good. That's pretty strong right there. So any upside move, I think you take it and run with it. And then finally, XOP, suffering like the rest of the energy. See my comments on that about ready to play at a breakdown. But if it does start moving up, this is a nice strong base, and the PSARs are up, and it won't take much for that spring to become summer. All it's got to do is get above about 47. So I could see some upside gains here, and treat this as a support level that comes all the way back here to support level at 40. I think if you treat 40 as support, you got a 10% trailing stop, you're in good shape. Okay, that's everything I want to cover on the speed runs. We'll get this published and posted. Let's get your stuff prepared and be ready for tomorrow. Let's get up and at 'em. Take good care.